Yo, 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 what is up, guys? You are watching passive earnings, more like actively losing money. You see, I'm down 1.6% today, which is over $2,560. Um, I closed a cash secured put, which I opened day before yesterday for Meta stock. I sold the cash secured put at 410. Closed it today for $2, and then open two more contracts for Amazon, because Amazon has earnings today, and which are gonna come in the after hours. And Amazon stock is down 2.3% for the day. And I sold a cash secured put at $162.5. So I collected, I think, $29 for this contract. So current price is $64. Sold two contracts, so meaning collected $58 here. And then if I were to sell the same contract right now, a few hours later, I would have made more than double the money than I did. So in combined, I made $58, but now single contract is selling for $63. So that's there. But it is what it is. The play that I really didn't want to happen was my cash secured put on SOXL for $30 put price. The strike price I selected was way too deep out of the money. But if you see here, SOXL is down 23.7% for the day, meaning all those stocks that are semiconductor stocks, including Nvidia, AMD, all those stocks are down bad. And this is leverage ETF, so three times those, meaning almost on average all the semiconductor stocks are down 8% for the day, and SOXL is thus down for 24%. So my cash ticket put at $30 strike price is at one point was at 48 cents per contract per share, meaning $48 per contract. Whereas in the morning, I could have closed this by paying just $2. And so I made $22 with this contract. If I were to sell again today, it would have made me $47. So that's the opportunity cost. That's not the real loss, I call it. And then I also sold four more contracts for SOXL at $28 strike price. I collected 9 cents or $9 per contract, or 9 cents per share. That translated to $36 for my four contracts. If I were to sell it again, it would have been worth $76. So again, more than 50% drop that I've seen. Could have made 50% more on all of these three things that you see here. So all these contracts worth close to $44,000 worth of contracts here that you see. So stock price are down. I think QQQ is down over 3%. Yeah, so it was down more than 3% at one point. Now it's up a little, so under 3%. But there are very few days when you're gonna see QQQ, NASDAQ is down 3%. And then even SEHD, meanings most of the shares that you see here are from Dow. Dow is also down, and Dow is having a worst day since 2023 February. And SEHD is down as well, 1.23%. SPY, our S&P 500 market, is down to $540 per share, meaning it's down close to 2% as well. I picked up a few shares, and what I did with my investments is whenever I sell a cash secured put or covered call, I buy more of these. So if you see here, by $34 worth of shares of SPY, and also I got more of these shares when I sold all those Amazon contract, and I sold the SOXL contract. So all of those, that money went into this. So if you look here, I have I made a purchase here at $34, $57 here, and there was a $4, almost $5 that came in the dividends, were also reinvested. So uh, all of these buys that you see here are coming from the market itself. So I'm not uh, putting more money in them, but generating the covered call and cash secured puts money, and then that money get invested into S&P 500. So that's why I'm trying to make a snowball of S&P 500, SCHD, and QQQ in a long term with all 100 shares, except for SCHD. SCHD I have made over 500 shares. I'm not buying SCHD anymore, but reinvesting the dividends, which is still gonna compound and have a snowball effect on the with SCHD. But QQQ and SPY are the ones that I'm gonna keep buying, and especially SPY. I want to invest in S&P 500 so that my portfolio moves according to the market, and then selling cash secured puts and covered calls will generate extra income. So I'm gonna keep close to 30 to $40,000 in cash. Currently I have close to $48,000 sitting on the sidelines, which I'm playing these options with. Hopefully none of them get assigned to me, and then I get to keep those shares and get the money back after the expiration date, which is going to be this Friday, which is tomorrow. So hopefully we'll be seeing that money back in our buying power by Monday, and we'll be aggressively selling cash secured puts on the quality blue chip stocks again, just like Amazon. Or if we get a chance, like days like today, SOXL, if SOXL goes down by 20% ever again, I'm gonna scoop up a few SOXL shares. This is, if you're not much aware of SOXL, this is a daily semiconductor bull ETF, basically a leveraged ETF 3 times, meaning all those holdings, and the top holdings for this are, let me show you those top holdings. I don't see them here. But anyway, long story short, the top holdings for this include Nvidia, AMD, ASML, all those big companies, TSM, and then Micron, MU, all those companies are holding for this ETF, and it is leveraged. So if Nvidia and all those companies go up $1, this ETF would go up $3, and same goes for the down day. So they are all down on average 8%, and this ETF is down close to 24%. That's a big drop. I haven't seen these big drops on SOXL in recent time. Just in past week or so, this is the most volatile week that we have seen. But other than that, like you see here, like $39 per share it was selling by July 31st. On July 31st, 8 p.m., it was selling for $46. So from $39 to $46, and look at it now, it is selling for $34. So it's extremely volatile. So if you are gonna invest or sell cash secured puts or covered calls on this, be very aware of the moves that you're gonna make. And I think it'd be a good idea to be a little conservative with this SOXL leverage ETF, but this can generate you good amount of money in passive earnings. So that's about it. Thank you guys for watching. I hope we'll see you guys tomorrow again, and with a little better portfolio value than today, with hopefully better returns as well. Till then, take care of yourself and people around you. Goodbye.